Too often we do these videos and say, hey, this is a great company, just not a great stock right now. This happens time and time again because good news spreads fast, and those great companies get big fast, often overinflated, not leaving much opportunity for the latecomers. So today we're going to flip the script. Today we're going to focus on 5 high-quality companies that are still high-quality investments. They each have durable competitive advantages, strong balance sheets, and the kind of fundamentals that have historically compounded wealth over time. Today I'll share all 5 of them and then fully explain why they deserve a spot in your watch list. But be sure to stick around to the end because indeed, I have saved the best stock for last. If that sounds good to you, then go ahead and hit that like button. It tells YouTube to show you more timely stock pick videos like this in the future. Now, the first one is a business you've probably driven past 1,000 times without knowing its name. That company is TFI International with a symbol of TFII, one of the largest trucking logistics companies across North America. No doubt you have come across many of their big rigs on the roads over the years. Now, before we dig deeper into TFI International, I should probably introduce myself. I'm Steve Reitmeister, but everyone calls me Righty. I've been a partner at WallStreetZen.com, where I helped develop the Zen Rings quant model and manage the Zen Investor stock picking newsletter. Actually, the stock I'm talking about right now is one of the most recent additions to my Zen Investor portfolio, where I share my top 20 stocks for the long haul. And here's why. TFII is a serial acquirer that has spent decades buying up smaller freight operators and then putting them together to squeeze out all the additional gains. Plus, it's emerging from a soft passion freight, which is leading to serious operating leverage. The proof of that last statement showed up in the most recent quarterly announcement, where they came in way ahead of expectations. Even better, they shared guidance that earnings for the coming quarter will likely be 50% above last year's level. This is a truckload of growth rolling their way. One of the best parts of trucking is that it's cyclical, and right now they seem to be in the early stages of a long-term upswing, which should lead to even more growth and more share price appreciation. Now, the pros are on board. Overall, there are 9 Wall Street analysts pounding the table with buy and strong buy recommendations. Even better is the exciting upside potential found in some of their fair value price targets. My favorite part of the current Wall Street coverage is that the highest price target comes from a top-rated analyst. I'm talking about Bascom Majors from Stephens & Company, who ranks in the top 9% of all analysts in terms of his actual stock picking performance, meaning that Bascom has the type of track record that people listen to because of how often he is right. And right now he is calling for nearly 50% upside on these shares in the year ahead. The good news keeps rolling ahead as I share that our Zen Rings quant model fully agrees with this bullish outlook. That's because TFI earns an A rating, which amounts to a strong buy recommendation. This comes from being the top 2% of roughly 4,600 stocks analyzed by our quant model. Let's take a step back for a second to explain the Zen Ratings quant model in that it evaluates stocks across 115 different factors, everything from growth to value to sentiment and more. Then it distills it down into an intuitive letter grade of A through F. Indeed, our A-rated stocks deserve that top billing because they have nearly tripled the S&P 500 over the years. And all the stocks I'm sharing today have this elite A rating. The Zen Ratings model further breaks down those 115 different factors into 7 underlying component grades. This is where we get to drill down and see a stock's unique strengths and weaknesses. Now let's see how TFII stacks up with these component grades. Now, financials is a good place to start. In the top 19% of all stocks, this is based on 26 different measures showing true operational excellence for the company. Growth is even better in the top 14% of all stocks. Then we have the AI grade scoring the top 11%. And a quick note on that, that isn't about how much artificial intelligence the company is using. Rather, it's our model using AI that spots patterns in 20 years of market data that often points to stocks likely to be timely outperformers. Now, from there, it just keeps getting better. Both safety and momentum land the top 5%, and the standout grade is sentiment in the top 2% of all stocks. This means the smart money is already moving aggressively into these shares. That is a very widespread strength across 6 of the 7 different component grades. Now, the one soft spot is value, which is kind of middle of the pack according to the model. But certain industries have different valuation metrics, which don't compare well to others. So in those cases, it's better to use the fair value targets from Wall Street analysts. And as you recall, that top estimate suggests that the stock could see nearly 50% additional upside from current levels. I find that to be a much more meaningful statement of the value proposition in these shares. Now let's take it from the top. The trucking cycle is swinging in a very positive way. In fact, TFII is expected to see 90% earnings growth this year. Now on top of that, you have all this Wall Street support. And then you have the stellar showing the Zen Ratings model. And it's not hard to see why I added it to my Zen Investor portfolio. and perhaps you might want to buy a truckload of these shares for yourself as well. Before we get to that next stock, I have a great idea for you, because if you like exciting stock picks, then I strongly suggest you sign up for my next live training session this coming Monday. The focus is on timely market insights plus my top picks. Now, it's totally free, but you do need to sign up. Do that now to join me this coming Monday at 7 p.m. Eastern Time. Just go to wallstreetzen.com/live. Let's get back to our top 5 stocks as we check in with stock number 2 in benchmark electronics with the symbol of BHE. Now, when a company designs and builds a complex electronics product but doesn't want to run its own factories, it hands the job to a contract manufacturer. Now, Benchmark is a leader in the space, building high-end electronics for aerospace, defense, medical, and semiconductor customers. The kind of mission-critical work where you cannot afford to make a mistake. And business here is sticky, since switching costs are incredibly high. That's a real economic moat protecting their business. Now, here's why it's time to consider this stock now. Benchmark keeps quietly stringing together earnings beats quarter after quarter. This is because their aggressive shift towards higher value, higher margin work in semi-cap equipment and medical, while its advanced computing business rides the same AI wave everyone else is chasing right. The most recent quarter once again sailed past estimates. This brings the earnings beat streak to 13 consecutive quarters, right? Over 3 years of nonstop success. Sometimes investors hear about that past growth and think, oh, okay, the party is over. Yet Wall Street experts are currently predicting nearly 90% earnings growth this year over last. That is 6 times the pace of the average company these days. Now, even better is the attractive valuation for that stellar growth, right? This shows up loud and clear in their low peg ratio of 0.8. Remember that the average stock right now has a peg of 1.5. So yes, shares are tremendously undervalued. Now, on the Wall Street analyst side, coverage here is pretty sparse, and honestly, that's part of the appeal, meaning our goal is to find some hidden gems that still have serious upside potential. Note that the lone analyst following the shares is in the top 1% of all his peers for stock picking excellence. So coverage is currently thin, but those covering have a long track record of unearthing stocks that outperform. Now, when there is low analyst coverage, then it's good to have a trusted quant rating system to do a deep dive analysis on the company. That's why I'm proud to share with you that Benchmark is another elite A-rated stock, ranking the top 2% of all stocks according to the Zen ratings model. Let me walk you through those component grades because they show strength across the board. We can start with the top 17% showing for that AI timeliness grade. Financial strength is in the top 16% of all stocks, and then it just keeps getting better. Sentiment in the top 7%, showing the smart money is on board. And then we have a cluster of grades in the top 6%. Growth, momentum, and safety, all top 6%, right? Value, again, is the one soft spot soaring in the middle of the pack C category, but that does not overshadow how many positives are firmly in their camp, like 90% expected earnings growth, like riding a 13-quarter earnings beat streak, like the stellar Zen ratings profile that points to likely share outperformance in the months and years ahead. We've made it to the middle of the pack of our 5 stocks today, but don't use that as an excuse to look past the exciting upside potential in the shares of Entegris with a symbol of ENTG. Every advanced semiconductor is made in an environment so clean that a single stray particle can ruin everything. So, as chips get smaller and harder to make, then the greater the demand there is for Entegris materials and filters and ultra-pure handling systems that keep contamination out and quality in today's modern chip production. Now, the timing of this story has a lot to do with the AI boom, which has led to an explosion in demand for leading-edge chips, the exact kind of chips that need Entegris the most, right? All that demand shows up in their earnings estimates, where Entegris is forecast to grow earnings 47% a year. That is 3 times the pace of the average company, showing clearly that the company is hitting on all cylinders. Now, as we turn to Wall Street, they're getting a lot of love these days. That's because we find 8 analysts singing their praises with buy or strong buy recommendations. There is also a slew of top-ranked analysts talking up Entegris. The most beneficial part is seeing some of their price targets point to over 40% upside potential in the year ahead. Probably higher than that if they keep up that earnings beat streak. And yes, our quant model puts in a rare company as well. Entegris also earns that coveted A rating, which amounts to a strong buy recommendation. All in all, it lands in the top 5% of the roughly 4,600 stocks we cover. The strength of that shows up in spades in our component grades. Now, we're going to start with the top 29% showing for financial strength. The momentum is a notch better in the top 23%. And keep rolling ahead, we have the AI grade in top 70%. Momentum and AI point to this being very timely shares, right? Amazingly, we have 3 categories bunched up in the top 11% together. That's growth and safety and sentiment. Value is the one middling grade with a C rating. That doesn't mean shares are expensive. This is more about GARP, right? Growth at a reasonable price. Again, that growth is coming in 3 times faster faster than the overall market because Entegris is perfectly positioned for what is going on with AI and tech these days. Now, as long as that continues to unfold, then there are strong odds that these shares continue to outpace the market going into the future. By the way, if you're gaining value from this video so far, then chances are you'll enjoy my future releases. So go ahead and hit subscribe and ring that notification bell so you don't miss any of my upcoming videos. Now, the next pick is the smallest company on the list today, but as they say, great things often come in small packages. And that brings us to Astronics with a symbol of ATRO. The company sits deep inside the aerospace supply chain. It builds the electrical power systems, circuit breakers, and avionics that keep commercial and military aircraft running. Once those components are designed into an aircraft, they're incredibly difficult and expensive to replace, and that is the economic moat around this business. Now, perhaps the best thing to tell you here, this is a turnaround story that's starting to hit its stride. That's because margins got crushed during the pandemic travel collapse, but the company has finally crossed back into healthy profit territory. Not only did the latest report handily beat estimates, but even better was management being emboldened to raise the full year outlook. This tells you the current upcycle has legs, or wings in this case, right? Not surprisingly, for a company this size, they don't have much Wall Street support, but the two analysts on board are both in the top 10% of their peers for stock picking excellence, and both are saying strong buy. So it's nice that these two top-rated analysts feel so strongly about this little-known company. Even better is that they still see shares outperforming in the months ahead given robust fair value targets well above current levels. Now, as with the other stocks today, it also scores the top tier A rating from our quant model. In this case, after the full 115-factor review, they are in the top 3% of all stocks analyzed. And the component grades reveal even more to like with Astronics, right? This starts with safety laying the top 16%, momentums and financials both in the top 14% of all stocks, and growth is the star of the show in the top 3%. This is the best grade if you're looking for stocks more likely to have beat and raise earnings reports. And in this case, they are better than 97% of the stocks we analyze. Turnaround stories are some of the best ways to find outperformance because it typically comes with outsized earnings leading to outsized share price gains. This explains why you have two top Wall Street analysts pounding the table on these shares. And don't forget the fundamental strength found in the Zen Ratings review. This greatly increases the odds of future share price outperformance. Now, before we get to that last stock, just one quick thing. If you want to stay one step ahead of the market, then join me live every Monday at 7 p.m. Eastern Time. That's when I share my updated market outlook and trading plan to outperform. This is also when I unveil my trade of the week based upon our proven Zen Ratings quant model and my greater than 40 years of investing experience. It's a free event, but you do need to register. Just go to WallStreetZen.com/live or click the link in the description or scan the QR code on your screen. Just pause the video for a minute to sign up. I can wait for you, and then I look forward to seeing you there on Monday. Okay, our last pick is the most recognizable name of the bunch today. The best part is the ability to buy it on a hardy dip. In fact, I recently added these shares to my Zen Investor portfolio where I featured the top 20 stocks for the long haul. Now, without further ado, our final stock today is Generac with a symbol of GNRC. They are the dominant name in backup power, things like home standby generators, plus a fast-growing business selling power system into AI data centers, the exact places that cannot afford to go dark even for a second, right? The last part about the AI data center demand is the booming part of the business. This shows up mightily in their two most recent quarterly earnings reports where they downright crushed estimates. This was followed up by raised guidance saying that the growth party is far from over. This explains why Wall Street analysts predict 64% earnings growth this coming year, 4 times faster than the average publicly traded company. Now, not surprisingly, these same Wall Street analysts believe that excess growth will lead to excess share price gains. This shows up in 12 fully baked buy and strong buy recommendations. Notice that the average fair value price target points to 30% upside in the year ahead, whereas the street high target says that 50% gains is more likely in the cards. Like I already said, this is my favorite pick today. So of course it scores an A grade from the Zen Ratings model after reviewing over 4,600 stocks. That strength is on full display in the component grades. That party starts with the top 14% for sentiment. This tells you the smart money is already on board these shares. Then we have safety in the top 13%. That means we are not taking on excessive risk when we buy generic shares. Now, the best part of this story is the top 2% showing for growth. As already shared, that is the best category for pointing out stocks more likely to have beat and raise earnings reports, which is the best catalyst to push shares higher. Now, here's a nice little bonus. Generac is the #1 ranked stock out of 73 in the highly rated specialty industrial machinery category. Right? A lot of money has been made over the years going for the best stock in one of the best industries. The main knock on Generac is that a lot of their home sales are tied to weather patterns and what that means for electricity outages. So a long stretch of better better than expected weather could tamp down some of that expected growth. But that does not sour my mood on how they are enjoying outsized growth thanks to the AI boom. Now layer on top the overly bullish Wall Street support and the fundamental promise on display in the Zen ratings. These positive attributes, plus the recent 25% pullback in shares, is a big part of why I recently added Generac to my Zen Investor stock picking portfolio. That's where I feature my top 20 hand-picked stocks for the long haul. So there are my 4 quality businesses that are also quality investments to put on your radar right now. Every one of them is experiencing exciting growth, and every one of them scores that elite A grade from the Zen ratings model based upon their stellar fundamental profiles. Again, A-rated stocks have historically beaten the S&P 500 by nearly 3-1 over the years. Please remember, the Zen ratings are updated daily, so you can pull a free rating on over 4,600 stocks yourself by typing in the ticker at WallStreetZen.com. This is a good habit to make before buying or selling any stock, so be sure to bookmark the site for the future. Now I want to hear from you. Which of these stocks is your favorite? And are there any other quality names I left off the list that I should feature in the future? Now, drop it all in the comment section below to share with our community. Want even more great stock picks? Then check out the video coming up next featuring 4 highly rated growth stocks trading under $20 a share right now.